we have yet again, you won't even guess. Yeah, you'll probably guess. Some mainstream media bullshit around Tesla stock and more rumors that Elon is disproving today. Alex here on X says Elon Musk's AI startup XAI has discussed a deal where it would get some Tesla revenue in exchange for providing the carmaker access to its technology and resources, the latest example of the growing interconnectedness of Musk's companies. Under a proposed arrangement as described to investors, Tesla would license XAI's AI models to help power its driver assistance software called Full Self-Driving and share some of that revenue with the startup. According to people familiar with the matter, XAI would assist in developing other features for Tesla, including a Siri-like voice assistant inside its electric cars and software to power its humanoid robot Optimus, the people said. You won't guess where it came from. It has to be two sources. Either one would work. Wall Street Journal or Reuters. This time it's Wall Street Journal. And if you want my honest opinion, that sounds like a good deal for Tesla. That sounds like it makes a lot of sense. If you could theoretically leverage up to $6 billion worth of GPUs to advance Tesla's technology and get us closer to robotaxis, how bad truly is it? But let's not get our hopes up because Elon Musk says this is not true. Elon Musk says he hasn't even read the article, but the above is not accurate. Tesla has learned a lot from discussions with engineers at XAI that have helped accelerate achieving unsupervised FSD, but there is no need to license anything from XAI. The XAI models are gigantic, containing in compression form most of the human knowledge and could possibly run on the Tesla vehicle interface computer, nor would we want them to. The Tesla AI models have incredibly dense, in a good way, intelligence as they compress video of reality into driving commands, but must operate on a 300-watt computer with memory size and bandwidth far lower than, say, a H100 GPU. So Elon Musk is literally saying XAI has basically all of the knowledge in the world, and your car unfortunately could not even process that. It would probably burst into flames or just go black instantly. I mean, you'd get probably a voltage surge throughout the car just trying to process that much information at the same time. Something that a Tesla cannot do. So even if this sounds good in practice, it's improbable that it could even work. Elon Musk goes on to say that Tesla's real-world AI also has a vastly large context size than a large language model, as the combined video history from all cameras is several gigabytes in size. And apparently this is the 5th time the Wall Street Journal has published inaccurate info about XAI, and we've seen this a lot recently. The Wall Street Journal and other sources, even Bloomberg, in which that's one that I have tended to respect a little higher than others. They've also published some fake information recently as well. Not to mention, just to point out, the report that NVIDIA was served a subpoena by the Department of Justice, and that was never true, but yet caused NVIDIA to sell off about 10% upon fake news. I mean, you have to be incredibly careful what you actually take in and consider true. And I think the problem with markets right now and Tesla stock, and a good chunk of the reason why Tesla is at $211 per share and not $300 or $400 or potentially higher than that, is because of all of the BS that investors, Wall Street, big fund managers that are, let's be honest, not as smart as you are, fed all of this information to believe a false narrative. These guys believe the robotaxi is decades away. It's not. It's potentially months away. And even on October 10th, we're going to probably, it's starting to look more likely, actually get the first paid robotaxi ride. Now, it's probably going to be like Elon Musk, doing a robotaxi ride from here to there. Maybe he does a ride from somewhere and shows up at Warner Bros. Studio, or leaves Warner Bros. Studios parking lot where they're doing the robotaxi event and goes on a paid robotaxi ride to his car or to, somewhere else close by. These things are happening a lot faster than you will ever hear on mainstream media. You understand this, okay? Here's where I'll bridge the gap, if you will. You understand this because you watch this channel. You're probably on X. You probably get real-time information. The algorithms are not as much. Yes, the algorithms are keen to Elon Musk's X account. If Elon tweets something about Tesla stock's going to react to it if it's during normal market hours, after hours, doesn't matter. Algorithms are plugged into Elon's X account. They're not plugged into Alex's X account, to Sawyer Merritt's X account. They're not plugged into all the other sources of real-time news that we are getting. They're not plugged into this YouTube account, for an example. So we get kind of the raw information first. Some is true, some is not. That's why you got to be careful of mainstream media. Some of the things they say are just ridiculous. But we have a massive head start or leap or advantage, if you will, over Wall Street and big money investors because of this. And I want you guys to take note of what Elon Musk just said. I mean, let's read this again so we don't miss this in the context of everything else we're talking about here. Elon Musk says, quote, I will put this in quotes, quote, Tesla has learned a lot from discussions with engineers at XAI that have helped accelerate achieving unsupervised FSD. Elon's almost saying that Tesla has achieved unsupervised FSD. This is more of a statement than a question, than a, loose-ended kind of statement. This is pretty definitive, helped, not helping, right? I think that's the key word. Elon says the XAI has helped accelerate achieving unsupervised FSD. They've sped things up a bit. I think this is actually Elon dropping us some pretty big news that we've already achieved unsupervised FSD internally at Tesla. I will be surprised if the algorithms pick up on this coming tomorrow morning. It's possible, but if they don't, then I think we kind of just got a sneak peek of what we're going to get on October 10th. You're going to get the robotaxi network that, maybe there's some software challenges. Maybe the app needs to be internally developed a little bit more and fine-tune FSD to some degree. But you're knocking on the doorstep of the robotaxi. Let's be clear about that. And if you've been invested in Tesla for a while, if you've been in the markets for a while, not even invested in Tesla, let's just say in the markets, then you even know back in 2020, all of the excitement was around Tesla's robotaxi. People were actually excited to buy Tesla stock at all-time highs. They thought it was a great deal. They thought it was one of the best stocks that you could own in 2020 at early 2021 when Tesla was at all-time highs. $400+ per share in the 300s, right? Because robotaxi was expected to start operations within the next 12 months. Yes, rates were low. Yes, there was a lot of money printing. There were other different dynamics going on. But with that context, to sit here and say we could be months away from the robotaxi network launching in, I would expect, select cities, your largest cities first, clearly. And Tesla stock's at $200 per share, and we may go through a correction here over the next couple of months, and Tesla could get even cheaper. And you're not going to buy that. You're going to be fearful. You're going to let mainstream media dictate your thoughts on this. No, they're going to be wrong. Tesla stock will come back something fierce. Now, we do have some other Tesla stock news to go over as well in this video. I want to give you a breakdown of the technicals, the option activity, the short interest, some of your other data as well, some sentiment stats around Tesla. But I really wanted to highlight that the disparity that you are going to witness, what we have witnessed between what's actually happening over at Tesla, the progress that we have seen over the past 6 months on FSD specifically FSD. Optimus, we don't get as many updates on, but I'm sure there's been a lot of progress there. Between what we know and what Wall Street knows, we will bridge that gap quickly after this correctionary period. Could be the end of this year, it could be the first half of 2025. That gap of knowledge will be bridged very fast, meaning that Tesla stock is likely going to appreciate in value at a rapid speed. Now, it could be October 10th, but at that point, are we in election fear mode, correctionary, crash environment? That's certainly a possibility, and I don't think Wall Street's going to care too much about robotaxi if everything's selling off. That's just my honest opinion. But we will bridge that information gap, that gap between reality and mainstream media's false narrative in a very short amount of time when it does happen. And that's why I think trying to trade Tesla, doesn't always make the most sense. But that said, it is also being reported that Tesla just published a patent for wireless charging of a car. That's pretty exciting, suggesting that even robotaxis could possibly be charged wirelessly. No need to plug it in, which would make a lot of sense. If you got to stop and charge, you got a passenger in the car, then you would probably want to do that wirelessly. That'd kind of be a turnoff for a lot of people. God forbid, they got to get out the car and plug the car in. Tesla has also filed a new patent for the unboxed process. This is essentially where they make all the parts of the car separately and then they kind of put the car together at the very end. Kind of like a manufacturing line, but a little different. This is said to reduce the cost dramatically of making a Tesla. Elon Musk suggests about 30% cost reductions could be possible via this unboxed process. And we are expecting the robotaxi vehicles, the lower priced new Tesla products to be built on this unboxed process. That's part of the reason why Tesla thinks, or says that they can offer a $20,000 or $30,000 vehicle and have it be really high margin. Part of that has to do with the unboxing process. Now, again, with that said, with this context in mind, I do think we are heading into a period of weakness for markets. There's just not a lot to be bullish on right now. We have to acknowledge, with earnings estimates the way they are, markets are still pretty much priced for perfection. They're priced for soft landing. There's no chance of a recession assigned by markets. Okay. That's a troubling position to be in when we have economic data suggesting the labor market, the economy could be slowing down. It doesn't seem like you're priced for any of that. And, the markets, if you look at a nominal or, mathematical basis, are pricing in a 0% chance of a recession. You really do this by looking at earnings estimates, looking at PE multiples on the S&P, investor sentiment, other barometers that are at all-time highs, right? There's no recession risk priced in. We also have an election where, not either candidate is decisively positive versus the other for markets. Now, there's, one that's more positive than the other. I think we all know who that is. But they both have policies in which, if they actually enacted them, would be negative for markets. And that's what markets try to figure out is, hey, how could my money be affected under this policy, this new regime, or that regime? And both of them just have negative implications, right? There's not one that's decisively, really good for markets, right? They're both kind of bad, just one's not as bad, right? We're talking about tariffs here. We're talking about corporate tax rates, right? And hopefully we understand that. So I do think end of September, October, we're going to be running into a bit of a rough patch of markets starting to look forward to the election. And we're not doing that yet. If anyone tells you this sell-off has been election driven, yeah, it hasn't been. Maybe to a small extent, but not nearly to the extent that we're going to be thinking about this coming in October. Like it's going to be everywhere. The election this, the election that. October, Yeah, that's all you're gonna hear. Okay, so you have that you're dealing with. You have the Fed that's going to be cutting rates September 18th, and the sweet spot for markets is normally after the last Fed hike before the first cut. So we got the last Fed hike July of 2023. Now we're sitting September of 2024. We've had 14 months of the Fed being paused and, the sweet spot for markets. Now we're heading into the first Fed cut, when historically is when you see downside in markets. And it's not like we can say the Fed's cutting into this super strong economy. No, the Fed is cutting into a weakening economy, and Bank of America and many other individuals on Wall Street and fund managers have also suggested that I did that in the last video too. You also want to potentially sell the first Fed cut. And, that's contrary to what a lot of you guys might think, but that's historically what happens. So you're heading into that. The jobs report on Friday just wasn't good like we expected. We missed on the headline job creation number. We didn't get a big fall in the unemployment rate. Like, I don't really see the upside for markets from the perspective of what causes it. Like, economic data, but then again, we don't get much of that this week. We're really not, we've gotten our big economic data out of the way over the last couple of weeks, and we could be in a period of, not great things. I should also mention September is seasonally weak. So if we're thinking about Tesla in that regard, I mean, we were down 8.45% on Friday. You're probably going to fall as well coming in this next upcoming week. The S&P was down 1/3 of 1%. That's not a small move in after hours. To fall 1/3 of 1% in after hours after already falling about 1.7% in regular trading is showing some unwinding of positions. It's showing some deleveraging of investors, and that could potentially continue. And I think the algorithms could continue to push Tesla stock down in the near term. And that's why I think over the next couple of months is your opportunity to really go shopping, as long as we don't enter into a recession. I think we need to start pricing in a recession to a 30, 40, 50% probability stance. Once we're at that level, I think it makes a lot more sense going out and going all in on this market. Okay? Because odds are decent we don't go into a recession, but we gotta price in some of that recession. We gotta discount that ahead of time, and we're not doing that yet. And I think we will do that, and that will cause more downside for markets. Okay, that's really the long story short, and that could mean more downside for Tesla stock in the near term. If we look at Tesla on a technical basis, you broke and decisively closed below your longer term downtrending trend line here, which was about 216, 217. You closed almost $7 lower than that at $211.50. Your next major level is that 200-day moving average at about $203 per share, and then your 100-day moving average at about $200 per share. Those are important levels. If you fall under that, then you're getting back into the 180s, 170s, and then ultimately 160s, 150s. I mean, after the 180s or so, you kind of go into no man's land down here. There's not too many levels that we can really look at and say, yeah, that's decisively going to be a support level or an area of demand for Tesla. It's hard to say that. Now, I don't think we're going to just collapse there, right? I think the next 2 months, the next 8 weeks could just be weak, and we may, get big up days, but we're also going to get big down days. Tesla stock's probably going to trend lower alongside the broader markets. And I think that's also what the technicals are telling you, especially this big rejection candle that we got on Friday. This is a rejection candle. Whenever you get big candles like this, you tend to get further downside. Like here in March of 2024, you got a big rejection candle, and what happened? Tesla stock continued to fall. You got a big rejection candle here, Tesla stock continued to fall. almost every time you see this kind of rejection candle, you see a lot more downside. Okay, right here, like a lot more downside every single time. And that's what you got again. The RSI on Tesla is at 48, so it's basically neutral, pretty close to that 50 level, which is technically neutral. So, you know, there's more room for downside from that metric. Tesla's short interest of free float currently sits at 2.95%, about $19 billion currently sold short in Tesla, totaling 82.06 million shares. You can also see on Friday you had borrowed shares of 4.63 million, return shares of 466,000. So there was over 10 times as many, short positions taken out in Tesla on Friday than shorts actually covering. That's a big change from what we have seen recently, where actually you've had a lot more shorts covering on short positions than actually taking on new short positions. So there was a lot more, taking on of new short positions rather than covering. Now, if you take a look at the option activity in Tesla stock, you had 46 different trades totaling $13.42 million with a positive order value of 35%. So it also did not look great from that standpoint. As far as the StockTwits sentiment barometer, currently you're at neutral of 50. Yesterday you were neutral at 49, which, I mean, hey, that's pretty good after, Friday was such a big down day. I'll take that. Message volume, it's coming in low at 36, which is common on the weekend. Shout out to you guys that are watching these videos over the weekend, because not a lot of people do. A lot of people just go off and enjoy their time. And, hopefully your dedication to this craft will reward you and your family with more dollar hollers over time. And that's how it tends to work, by the way. Participation ratio is high at 55%. Of stocks currently trading above their 50-day moving average. This is something I really like to look at to kind of show you the internals of our markets. You're at 44%, 44.24%. You're kind of historically just average here, around 50%. The highest side we've seen over the last year is about 86%. The lowest, level we've seen is about 15%. You're 44%. There's still a lot more room to fall to the downside here before stocks are getting washed out. And this is just stocks, trading above their 50-day moving average. So like if we go through a downside move, 15% of stocks trading above their 50-day moving average, that's where things are starting to look really bad. But you could even get lower than that. So again, hopefully you take away from this video the main message, right? We know things Wall Street does not. The algorithms are not plugged into our news sources the way they are to Wall Street Journal, to Bloomberg, to all the major news providers that are spreading a false narrative. These guys know half or less of what you do about your investment in Tesla specifically. And that affects the algorithms. That, confuses the algorithms and misprices stocks. And that's why stocks are, can be a great place when you can identify this. That's what Warren Buffett's always been about, is identifying value when the markets do not. And, Tesla is definitely that example. Now, I think Buffett hasn't bought Tesla yet because I don't think he understands it enough. Full self-driving cars, not really up his alley. But if it was up his alley, I think he would be a big believer in Tesla. Just to kind of throw that out there. So in due time, I think Tesla stock will react in line with what we already know. A lot of us are going to just, scratch your head like, why is Tesla at $200 per share when they're about to launch the robotaxi network? Isn't that just crazy? Yes, it actually is. Yes, definitively, decisively crazy. Yeah. But the bridge between the knowledge gap of us and Wall Street will narrow quickly when it does happen. I do think in the near term, we're set up for more downside in markets. There's not a huge bull case for stocks right now. In fact, there's really none unless we get stronger economic data, which at this point, it's not looking decisively, likely. And that's going to set you up for a really good buying opportunity. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.